Hello, this is the chart profit video, Friday 20th of April, about 2 hours into the trading day. This from the pre-open today. We're looking at the E-mini S&P. On Wednesday the E-mini reached but didn't exceed 4-month resistance at 27.18. Had a lower value area generated on Thursday here. Monday last week I marked aggressive selling here. The low of that day here at 26.65. In an uptrend, the low of a green at top day usually holds, so I take it as a warning if the low of a significant buying day is actually broken. So that would be the first clue. Down here we have the big support, the 9-month down here at 26.47. As I said over here on Monday, a value area generated below that level would be the first sign of weakness. It's also quite possible that time spent above 2700 could actually lift that 9-month point of control. If that happened, it would effectively remove this resistance. This has currently stalled the market at that point. If that happened, if the controlling price moved up to here somewhere, we would then just be concentrating on price relative to that level. Currently you can say the E-mini is in a strong position above 26.47, but there is resistance to overcome up here at 27.18. Breadth numbers have improved this week. They're all currently above 50. Those numbers being percentage of stocks greater than their 50-day moving average. That number for New York, for instance, in part makes up this daily breadth indicator in the middle of the pulse chart here, which turned green a few days ago at the same time as the price oscillator, price at the bottom here, got itself back above zero. So this is slowly becoming healthier looking pulse chart. Obviously we need to hold those levels, and some more green up here would be a positive sign. Here's the two levels on the current live 30-minute chart. E-mini currently around 26.75. The big support is here, and the less important resistance up here at 27.18. So we'll look at the major ETF charts. This is the spider. The equivalent level, the equivalent support level is this 9-month here at 264.50. Higher low above that level would be a bullish sign. IWM, Russell 2000 ETF, support here is the 1 year at 153.50. UK FTSE 100 index, large cap index, will close very soon, and it's having a good week this week. There's been some weakness in the pound, which has helped the large caps higher. On this chart, however, there is big resistance up here at 74.13. Price above that level would be a real positive. We always put the halfway points in, and from this high the half range comes in here, and just today at the end of this week we're above that level. German DAX is kind of the other way around. It is yet to overcome its natural chart resistance, that halfway point, but it is above its 2-year, which is now support. Always useful to have controlling prices of any major degree underneath the current price. So I'm looking at key charts, the DAX, IWM, Spider, all in that situation. And again here, price below that 2-year would be weaker position for the DAX. Looking here at the T-bond ETF TLT, I've been saying for a while that these two levels, 121 and 119, are almost the equivalent in terms of time. So in terms of their importance as controlling prices, they're kind of equal. However, this week, because of the time spent here, actually tips the level of importance towards 121. Time, as we are right now, down at 119, could change that, but as we do this, in my view, the chart actually looks like this, and we have TLT bonds in a weak position here. I'm saying there's some doubt over strengthening the chart, and there would have been until we saw a clear higher low above 121. And that may happen, but currently this chart not so strong in this analysis, and just in the short term, off a low to the first rally high, we always mark the halfway point. I'm actually back underneath there, and you'll know that many times I've said that that will often indicate a retest of the low. So current levels, I'll be looking for price spending time clearly above 121 for looking at the long side of TLT. This is USO, the oil ETF, checking the price time distributions on the half-hour chart. The 12-month has settled at 12.79, and that came in about here, and that's the first support now on this chart. But we've broken out above recent highs, and this chart strong in the short term above that level, strong in the longer term above the major at 1141, which we've been saying for quite a while throughout this process. GLD, the gold ETF, consolidating here above the 4-month at 125.23, remains in a strong price location. Can be looking here at the dollar index. These are the important levels. The major up here at 95.50. We're trying to find a value level for itself down here, which has actually come in just on the sort of the halfway of this range at 89.62. It's an 8-month controlling price. It has been moving around a little bit, but it seems to have settled in there. This may be a bottoming pattern here, or some kind of continuation triangle. Just kind of interesting that controlling price has settled right in the middle, and we are printing above it. So if this is a base, we'll look for some kind of clear higher low coming off that, and we'll look at the other charts for supporting evidence. So let's look first of all at the pound. Earlier in the week there was just a probe above the recent high, and that has been rejected. We're off quite sharply just the last couple of days, and as I've been saying in the pre-open, once again, like the probe earlier in the year, it's above this important value area high here, and I've been saying that price acceptance up around that would be bullish, but it is, in terms of the larger long-term distribution, that is an important level. First clue that we're seeing something more important than noise here, this little retracement, would be where you can see the support just a couple of weeks ago at 139.65, which is the 6-month controlling price, and if we see price being accepted below that level, that'd be the first indication of weakness to me. And of course everybody's watching this trend line off the bottom here, so if we start seeing price here, it would attract a lot of attention, but we'd see the first signs of weakness just if we see a break of that 6-month controlling price. This is an interesting chart, the Euro FX chart, a large component of the dollar index, and you can see that almost like an inverse of the dollar index. We've been going into a sort of consolidation up here, the controlling price emerging right in the middle of that consolidation. The most important thing here is that this level 123.30 has actually emerged across this range here as the major, so this is a really seriously important level to watch now for the Euro FX chart, and we're currently printing below that, and that's a positive for the dollar index. If it's going to break down here, we need to see a clear lower high below that level. Something similar here on dollar yen chart with the first sign of strength. The 6-month controlling price has slightly migrated, it's 107. We talked about the possibility of some kind of bottoming pattern here last week. We have seen on the dollar index Euro FX chart, the dollar yen here, that there are signs of some strength for the dollar. I'll finish with a look at the sentiment. Each day I follow my version of the RIDEX assets ratio. It was higher on Thursday at 15.79, but it did fall to 13.93 on Wednesday, which was a 43-day low. I've been concerned that the sell-off in March, unlike the sell-off in February, which produced some fear, we didn't see the ratio decline very much through this point, but at least we've now seen this 40-day low. That came in as the market had been climbing for a few days, so we have seen some fear registered in this indicator this week. And I'm looking here at the total assets amongst the funds that I follow, and you can see the difference between where the total assets are now and where they were just before the market ran into the recent top up here. So generally and relatively to this, participation is low at the moment, and you can see if I isolate the bull fund assets, we're here relative to where we were back in December up here, and bull fund assets have just reached their lowest level since back over here in October. So we could call that some nervousness, fear. With the ratio where it is, it's not clearly bullish, but good to see bull fund assets at a 6-month low. We had $4.6 billion flowing in as a net inflow as reported by Lipper US fund flows this week. If we look at the 4-week summation, the 4-week flow number, that's at a negative 15.7 billion. But that number, that's the black line here, did fall to a negative 29.9 billion just a week ago, and that was the lowest since this level here back in December, negative 33 billion. That was actually the lowest since 2008. It came in just here before the market ran up to its high, and as we know, investors piled in. You can see how that 4-week sum rallied terrifically, and it's now fallen all the way back. And we'll look here at the investors' intelligence poll. Bulls percent was slightly higher at 43.6, but the previous week 42.2%. That was the lowest since November 2016. 13 weeks ago, however, Bulls percent reached its highest level in 30 years. There's been a big change in sentiment here. If we look at the 4-week moving average of Bulls minus Bears, which is this black line here, it's currently at 27.2. That's here, and that is actually the lowest since this point in November 2016. So from a contrarian point of view, again, that pattern often brings in a market low. And let's look at the public poll. As I said here, there's quite a change this week. Bulls suddenly emerging, so the Bulls percent jumped to 37.8 from previous week's 26.1%. That's quite a jump. That was, however, the lowest since week ending 1st of September. Bears percent this week sharply lower at 29.2 from 42.8. And if we just look at the net, which is the Bulls minus the Bears, currently at a positive 8.6, but a week ago it was here, which was a negative 16.7. That was a 2-year low. And I'm looking here at the 4-week moving average of the Bulls minus the Bears, the black line, which is currently negative. And if we just take a knee-jerk kind of contrarian response, okay, well, all of a sudden the Bulls have piled back in, if you like, in this poll. You could say that's a negative. But I thought I'd have a look at the situation where the 4-week moving average in black here is below 0, and then you get a strongly positive number for the first time after that average falls below 0, and you can see that's where the arrows come in. So that's what's happened this week, and in the short term at least, none of these were particularly negative for the market. Okay, that concludes. Once again, I thank you for watching.